If we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. In November of 2034, 99% of all the Bitcoin will have been mined, and the last 1% comes out over the next 100 years. And so you have about 42 quarters, somewhere between 40 and 42 quarters. And if you look at that 40 quarter period, at the beginning of the gold rush, no bank could custody Bitcoin, no institutional investor could buy Bitcoin, no Wall Street trading firm, no investment company could handle Bitcoin, and it was unclear whether that ever would happen. That was a binary. And when those spot ETFs were approved, that created a fire, an avalanche. The genie's out of the bottle. It doesn't matter who's elected president next. It doesn't matter who's the next head of the SEC. It doesn't matter. And no politician's opinion, no banker opinion, no regulator opinion matters after that date. That was the most consequential thing that kicked off the gold rush. Every single institutional investor would have looked at this and said, Bitcoin interesting, but I can't buy it. You know, everybody. And so you have 99% of the money in the world that has been unable to buy and so unwilling to consider. I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked, the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches.
Well, ETFs have been a very popular investing vehicle over the last decade, and it seems like it's not just going to eat into the gold ETFs, but perhaps even maybe something like the S&P, the SPY ETF, which has been so popular. Do you have any thoughts on that?
That is one of the surprising consequences. We thought that maybe Bitcoin was a competitor to gold, but it's actually run up the leaderboard, and now it's starting to nip at the heels of the S&P 500 index ETFs. If you're looking for an analogy, imagine a business without a website. It was pools of money without an ETF ticker were mutual funds. So if we look at the history of investing, we kind of went from buy the stocks individually to trust a money manager with a mutual fund, and the mutual funds made Fidelity. And then 30 years later, the ETF came along, and it was a universal API that you could use to trade a mutual fund. So in the mutual fund world, it takes you a few days or a week or 2 weeks to set up an account, and it takes you a few days to move your money in the mutual fund. And you have to redeem your money, and it takes you a week to get your money out. And so it was a very slow, low-frequency relationship. And the typical investor is going to just do business with one company like Fidelity. When the ETFs came along, you could have any stock trading app, and you could trade from one fund to another fund. You could trade, in and out of funds 6 times a day. You could every day say, well, I want to buy this thing from Fidelity, this thing from BlackRock, this thing from Vanguard. And you could put those funds in the same watch list as your Apple stock or your Google stock. So it's kind of the same impact the internet had, which is, there's a retail store, there's a restaurant, what's the website? Like, I want to say, let's go to a restaurant, you go check out the website, it says this is where it is, this is how long it is, these are pictures of it, this is the menu of it. Now, imagine I tell you we're going to meet at a hotel or in a restaurant and there's no website. You're like, no. Like, your reaction is, so how am I supposed to figure it out? Like, well, you get on a plane and you fly there and you walk through the door and you ask for the menu, and at that point they tell you what it is. You think that just seems so 20th century. So, you're laughing, but you can't do business without a website. The website is a universal API of information. That ETF ticker is the financial API for an investor. And so that has been extraordinarily successful, but Bitcoin, it's like Bitcoin didn't have a website, right? Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something. You type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app, instant information, you can buy, you can sell. And of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone who will give me a loan. Then I have to move the Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors, and you really can't underestimate just how profoundly important that is to the entire network.
Coin Stories is brought to you by BitDeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, BitDeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. BitDeer's not just mining, they are industry pioneers, and BitDeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. I had a guest on my show recently and a clip went viral because he said that the ETFs were a sign that the industry, the ecosystem sold out to Wall Street. That means that we're giving up, that Bitcoin, this decentralized network, is ultimately becoming centralized. And I wanted to get your reaction to that because I know that's something you talked about in your speech here in Madeira, was that we don't have enemies. We just have people we haven't recruited to be our supporters yet. And the government isn't our enemy, Wall Street's not our enemy, so maybe you can touch on some of those points.
Yeah, I think that ETFs are just another application of Bitcoin. And there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created. And something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, and once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. And, you'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. And then a country, and if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network and as they build applications on it and as they invest in it, it's impossible for them to take it over because the network outside of the new actor is actually getting more powerful at a faster rate, and it actually empowered the non-ETF holders 100x more than it empowered the ETF holders. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful and empowers every other